Federal Reserve Chairman Jerome Powell says the Fed will start raising interest rates as soon as March to fight rising inflation. That means everything from car loans to mortgages could soon be more expensive. Inflation worries have sent stock prices plunging this month. Here to break it all down like recycling day, CBS News business analyst Jill Schlesinger. Jill, what's going on? How are you doing?
Doing well.
All right, so what changes could we see the Feds make as soon as March?
So it looks like a quarter-point increase coming as soon as March. Probably going to see maybe 3, 4, could even be 5 quarter-point increases. Jerome Powell says this is a sign the economy is recovering, but it's also a very clear sign inflation's on the move.
Now, what impact would this have on the consumers?
Well, it really impacts all of us. If you are a saver, you're totally psyched because you're saying, hey, I'm going to get paid more interest on my savings, my checking, my money market, my CDs. But if you are a borrower, things could start costing more. Not all borrowers, but if you've got a credit card balance, if you've got maybe a business loan or a variable home loan, those payments will start to increase as soon as March.
What about the housing market and mortgages?
The Fed does not control the rate on which mortgages are based, but mortgage rates have been on the rise anyway. In fact, we hit a 2-year high in 30 and 15-year rate mortgages. But the thing is, this may be actually a good sign for the housing market because it's been so hot. Cooling it down a little bit isn't so bad. It just makes it hard for a lot of first-time home buyers.
Okay, so with the rates expected to rise, what can consumers do?
Pay off any of those variable loans as quickly as you can.
Really?
Don't deplete all of your emergency savings, but get a jump on this. This is going to be something that's with us throughout this year and next, so pay down those loans.
Okay, with this news from the Fed, we have been watching the stock market. Do you expect things to settle down at all?
No, definitely not. No, it's not going to settle down. Listen.
I know what you're going to say. Stick to the game plan?
Stick to your game plan. You've got to get in front of this and say, I am going to tamp down my emotions. It's going to be volatile. It's not necessarily bad for stocks. So please, please don't try to outguess the Fed and do not time that market.
When I throw you the ball, you always catch it. You're the best in the business. Thank you so much, Jill Schlesinger.